Welcome to Crypto Down, JP. Welcome to the buy as well. You're not new here. Yeah. I'll get straight into it. So you're the co-founder of Soma Finance. You're also the CEO and co-founder of Mantra Chain, better known as that. Mantra mainnet around October.
Yep.
In January, you had a deal with Demark, which was like $1 billion deal, tokenizing real estate here. In February, you received your VARA license, which allows you to become a virtual asset exchange. In the last 5 to 6 months, your token really appreciated in value, and there was a lot of chatter about Mantra suddenly, right? And on April 13th is when the token suddenly dipped like 90%, right? And it's a top 20 token. Never heard of the price dipping so much. So tell me about all of this. Who is JP and what is your story?
Sure. Yeah, there's obviously a lot to unpack. Mantra is almost 5 years old now. I think I started working on the project in May of 2020, so like right in the beginning of COVID. I think even like predating Mantra, I've been in crypto for quite some time. I joined the industry full time, I think in like 2017. But prior to that, I was working at an investment bank in Shanghai, where I was actually doing kind of fintech, blockchain related research. So I've been like looking at the space for nearly a decade now. I'm first Bitcoin back in 2013, so like pretty early adopter from that perspective. Initially started working on an exchange that I helped like really very early crypto career. And the whole idea was to create like a one-stop shop kind of thing for any asset under the sun. And this was back in 2017, 2018, where compliance and regulations and KYC and things for Asian-based crypto exchanges was a bug, not a feature. So it didn't get a ton of traction, but that was kind of like my first soft landing entrepreneur experience. Like basically helped set up the Hong Kong office, and we did all the listings and all these different stuff. Made all the entrepreneurial mistakes you can imagine, including not having the right partners, and got left holding the bag with a pretty tough situation early on in my career, which was not an easy thing to come out of, but fortunately was able to then meet some good partners through that experience. And I think the story of me is just like consistently trying, in many cases not succeeding or getting some degree of progress, but then not all the way, but just keep going, learning and trying again. And unfortunately during that experience, got my like entrepreneurial scars, I would say, but then met some good partners as well. And we continued on this idea of tokenization and building compliance focused applications with utilizing blockchain. And that's when I met through that experience is when I met the US broker-dealer partners, Bill and Jim. So they own a US broker-dealer called Tractorian Capital. And we said, hey, we want to go out and do STOs. That was like the next thing back in 2018. And we were leveraging this broker-dealer license. We said, hey, listen, like there's an interesting opportunity here, but US rules don't necessarily apply to existing broker-dealers for tokenization. There's an additional like addendum or an additional license that you need to get or additional approval. And other people were just doing it. It was like, okay, we have a broker-dealer, we can go do a tokenized private placement just like we would do a normal one. And we knew that wasn't the case because we had actually asked, said, hey, can we do this? And they said no. So we went on a very long journey, which took a year and a half or so before we finally got issued this license in the middle of 2019. And we were expecting like, oh, it's going to be amazing. Everyone's going to be super excited, but no one cared. And I think licensing, compliance, regulation, these type of things, at that time it was tricky and difficult for people to understand. But even today, it's like people don't really get it, honestly. They just care that there is a license because it's a very nuanced, complicated thing, right? And we got this license and we're like, okay, let's go do this. Let's go do our first deal. We tried to raise money. It was really tough. Obviously, that was like one of the worst crypto winters that was going on. And no luck. And we found a deal. I actually ended up like reaching out to a professional basketball player named Spencer Dinwiddie on LinkedIn. And I was like, hey, I saw that you had an article on CoinDesk. I saw that you want to tokenize your basketball contract. We have a license, I can help you do that. We should talk. So we started talking, and I think they ended up going with 2 other broker deals first, and both of those transactions got shut down. And the third time was kind of the charm in this case, where they came back and we were able to get the transaction done. Again, like that story of progressing and then not getting it all the way there, COVID happened. This is February, March of 2020. So the pandemic is in full swing. And this is right when the transaction's closing. A lot of people pulled money. People didn't know what the hell was going on. Obviously, people didn't want to buy a basketball player shitcoin at the time. Fair enough. But we did get the transaction done. It was a good proof of concept. And then, honestly, like, I needed to figure out what to do. I was going through, honestly, personal financial trouble. So honestly, I'd put like all of my money into trying to make this thing work. And I'm taking a salary in 2 years or whatever it was, just like the standard thing you have to do as an entrepreneur. And then got involved with this other project that was building out a Polkadot parachain. And we were going to supposed to come in and run this exchange product for them. And then that got pulled out at the very last minute. And then together with my partners and a few other people, we like, okay, let's go ahead and start this DeFi product, DeFi platform, which is Mantra DAO, is what we launched it as. I think we launched it like $20,000-$30,000 back in 2020. This was like on the earlier part of DeFi summer. We'd been just personally early DeFi users, and thought it was an interesting idea to like leverage this amazing new technology that Polkadot had, or promised at least. And DeFi was coming along. We were like, okay, this is really interesting. We can do all different types of stuff with staking and proof of stake blockchain networks and lending and all these different things. So we had this big vision to make this amazing DeFi platform. Went out and raised some money doing an ICO, which again was like right around the time when we started it. Everyone's like, there's no way now you're gonna get an ICO. Like, people weren't doing ICOs at that time. This was still a time when tokens equaled bad.
Right. Which year was this?
2020. It was like May 2020. So I think it started like Compound launched, and a few other things started happening. Then you had all the food tokens. So things like started to pick up a little bit, but it was still relatively early. We were one of the first kind of DeFi summer launches that wasn't like a food token or whatever. And we like raised some money. We brought in some more institutional investors, but a lot of it was like honestly retail or smaller guys. There was no such thing as a launch pad back then. We did everything by hand. I think we like KYC'd 4,000 people. We gave 4,000 SAFs to people because we didn't have any other way to do it. So we just tried something. And we launched, and we had some decent success. Initially, we launched it with amazing day one launch. And then we started getting really flooded by like a competitor Polkadot project from China. One of their advisors at least was like talking all kinds of crazy shit. He was like putting out paid articles in Chinese media that I was like a white monkey and like all this crazy stuff. That I was in jail and like I've never been arrested. I think I've only had one speeding ticket in my life, type of thing. But anyway, that was like a crazy time. Like we had even had Alameda and supposedly FTX had invested into the token, and they like came out and then made us retract that that they had participated. So it was like this whole big shitstorm. The token went down. And then we kept building. We launched a bunch of products. We had a lending product. We had staking. We had all these different things. We ended up getting listed on Binance in March of 2021. And that was like our peak all-time high for that like period. This was still under Mantra DAO. So we launched it as Mantra DAO. And we launched it actually on Ethereum because Polkadot hadn't even launched yet. And then the next wave of kind of the cycle, everything shifted from DeFi into GameFi and Metaverse and Play to Earn. And we kept building, and we kept thinking basically that there's lots of issues with DeFi as it is today. There's rug pulls, there's scams, there's like all these things that are harming the average user. And frankly, like DeFi is dangerous for most people. You wouldn't want your grandma or your parents or someone who doesn't know what they're doing to go try to interact with this stuff because you're going to lose money quickly and permanently. And I remember being in New York City for Masari Mainnet in 2021 in September, when Kwon got his famous subpoena when he was going on stage, or Don't came, and we could just see that there's like regulatory writing on the wall. And then that's when someone came in the picture and we said, hey, like we've built out this tech now. There's this U.S. broker license. Let's combine these two things. That'll be a good mix of protecting investors, but utilizing blockchain technology for transparency and for reducing counterparty risk and self-automating smart contracts and all this stuff. Good idea, not the right time. We kept building it out, but doing anything in the regulated space in the US in 2022 and 2023, and even in 2024, to be fair, was like almost impossible. But we kept building and kept working on it. And then because it was taking so long in the States, and because we needed effectively to be able to interface with the US regulated partner, which is Tritorian, Mantra, which was like the tech builder in this relationship. So Mantra built the tech, Tritorian is a license, that's what Soma is. Because we needed some licensing to be able to like have a license to license kind of relationship. We started looking for other places and other jurisdictions where we could get licensed in, and we were looking in Europe. We looked in Liechtenstein, Switzerland. We went into Dubai. We went to Abu Dhabi, Singapore, Hong Kong. We were like literally all over the place. And we ended up settling on Dubai as a place that we should, hey, this is an interesting opportunity for us to have some licensing. This looks like a progressive, friendly framework for us to operate under. This was like the early days of Vara. I mean, we were probably one of the first applicants, like legitimately one of the very first, maybe in the first 10. So this is when they had the MVP program. And we did that. And we're like, okay, great. Honestly, we thought it was probably going to be a little bit easier than it was. It's a good thing that it's not an easy license to get, to be honest. That's the way you want licensing to be. It should be rigorous. It should have high standard. And we went along that journey of trying to get this license. And then when we were doing that, trying to raise money, I kept building and the team kind of shrunk and had to reduce headcount. It was very tough. Again, went without paying myself for a very long time, put all my money back into the business. And like right now there's like a lot of stuff going around about my watch collection or whatever.
Right.
I sold all my watches other than the one I got for my wedding and put it all in. And that's kind of what I would do regardless of what we're going to have to do now too. I'm always all in the mantra, but we'll do whatever we have to do to make sure that continues going forward. But then we kept building, and I always thought that it was going to be critically important to have a protocol specifically built for license, compliance-focused applications, regulated applications, permission applications, with the protocol itself being where it enabled builders very easily to build on-chain without having to worry about permissioning and smart contracts and all this other stuff, because institutional builders don't really think that way. Whereas the Web 2 guys, or sorry, the Web 3 guys, they don't want to think about the compliance part. They just want the toolkit to be able to build easily out of the box. That's what I was thinking. This is going to be important. And it was also just filling a need for us. Like we needed a blockchain that was performative, that had interoperability built in, which is why we built on the Cosmos SDK because of IBC. It was Cosmos is like a build your own use case, and we have a technical foundation to build upon, which is why we liked it. We weren't trying to like innovate on the consensus layer. We just needed to be fast and scalable enough, right? Or performative enough. And we launched the first version of our testnet in, I think, November of 2023.
Okay.
And around that time, I think October, November was our very all-time low. I think we were down to like 1.7 cents at the lowest, and probably like 12 million, 13 million market cap circulating. And I think pretty much everyone thought we were dead. I think a lot of people think we're dead now, but really no one even knew us other than our community who was holding. Everyone thought we were dead. And I had people coming, hey, can we buy out your token on Binance? We want to reinvigorate the project. We want to do a new reverse takeover style acquisition. Even on, I think, Chopping Block, they said that someone took over the project and took over the team. Yeah. Absolutely not. I've been there for the 5 years of Mantra's history. But this is maybe what they're referring to. I had a bunch of people asking. I had people saying, I'll pay you $10 million to buy your token and you have to stay around and stuff, and then we can continue going forward. I said no. Fortunately, at that time, we also met with a local Abu Dhabi-based fintech VC and investor. Nothing to do with crypto, or very little to do with crypto. We were the first token that they've ever invested in, but they had a thesis that like real-world assets needed a blockchain, and we were going to be that. And we had built up this. We already had a head start on the actual tech, but we'd also had this licensing. We had all these things coming together. We had a UAE focus,
right? And
it was like a match made in heaven. So they came in and helped back us, and that was kind of like our first institutional support. And that's really what allowed us to take the existing ERC token, which was at that time maybe like 85, 90% in circulation. Today it's 100% in circulation on the ERC side, and honestly that's where a lot of the FUD was coming from too. Like, how did the ERC and the mainnet go together? But the whole point was we had already emitted all these tokens, and they were literally in the hands of the community.
Okay.
The team had some left in the treasury, but like the majority of it was issued back into the community. And we had no way to connect this chain, which needed a completely new tokenomics, because you're launching a blockchain, you need to have economic security and you need whatever. We didn't have money, so we couldn't do buybacks. Like, we couldn't get supply on our side in that situation to then go launch this chain. So we needed a way to bring those two concepts together, and Sharuk was the glue, and other partners that came in during that round were the glue that like helped us bridge these two things together. So we went out and said, hey, like, instead of having a new token or two tokens, which then just like airdrops back to the ERC Ohm holders for this new chain, we're actually going to call it Omega, and it was going to have a totally separate token. Let's just combine those two things, make sure that Ohm becomes the center of this new universe. It's the gas token for the chain. We merge these two tokenomic models, and we don't need to have two tokens anymore. And we got the community supportive of that, obviously. Like, the people who held Ohm, of course, they want all the value accruing back to Ohm. Not saying that like an airdrop wouldn't give them some value, but of course that's much more significant if the whole point is to be holding and using Ohm. And of course they voted for it, Right? Who wouldn't want to have that? And we passed the proposal. This is the new way forward on the tokenomics. This was in like February of 24.
Okay.
So a little bit over a year ago. And then we kept building, and I think people started knowing us. The token performed incredibly. I think we were like one of the best performing, if not the best performing token in 2024. Outside of like maybe a couple meme coins, or maybe virtuals. I think virtuals. Yeah, virtual was crazy. And then we kept building. We launched our chain in October, like you mentioned. And we had a lot of interesting and strong real-world asset initiatives and partnerships that we announced, including the DAO, including the VARA license we got this year. And frankly, we're just, I think we're like a UAE coin to a degree, right? Everyone here has some exposure, deeply connected into institutional circles here, deeply connected in the family office space and high net worth space here. And yeah, and then, up until about 2 weeks ago, we were in the top 20. Token was performing insane this year, probably a little bit too crazy, to be honest. And we had a very unfortunate incident on the 13th. For me, it was the 14th because I was in Korea. And
what went down when it was going down? And I think you mentioned you were in Korea for a summit, and then you were in your hotel, and then you got a call, right? Walk us through that experience and what really happened there.
Yeah, so basically I was in Paris prior for Paris Blockchain Week. And then I put out like this tweet that I wish I hadn't put out that said, which was a true treat. Like, I don't have any Wi-Fi on this 14-hour flight or whatever going to Korea for the summit. Like, I hate it because I can't work, which was true. I normally always work through flights. I always want to have Wi-Fi. I always want to be connected. Like, me being Wi-Fi-less for 14 hours is like my worst nightmare. And I got to Korea and it was fine. Nothing. And on Sunday afternoon, my wife is Korean. I went to dinner with her parents. We had Korean barbecue, in-laws, and nothing was fine. I didn't tweet again. I went to bed around midnight. I was supposed to wake up at 6 to go to the gym. And I got woken up by the hotel calling me at 5 local time. So 5 a.m. Korea was like midnight here. And I looked at my phone and I'm like, what the hell's going on? And the token price was way down. I'm like, what's going on? So obviously the team had already been up. They'd already gotten together a war room. And of course I was like panicked and freaking out and wasn't really sure what was going on. But then I was basically told like there was massive liquidations on exchanges. Something happened. We need to figure this out. Definitely the worst wake up I've ever had in my life. Even worse than the day I woke up and my house was on fire, to be honest. It was horrible. And we immediately got to it and tried to start putting out messaging and try to start showing people that like, hey, this was not an insider rug pull. This wasn't a scam. Team didn't sell. Investors didn't sell. And there's all this misinformation that had happened in the 3 hours since it like really crashed to when like we were finally able to have me respond.
Right.
And that 3 hours I wish I could have back, obviously. But in the end of the day, what we ended up doing was like, okay, let's get full clarity on what's actually going on, talk to our exchanges. We immediately called the regulator, talked to our different partners, what's going on, get together a bit of a war room, and figure out how to start communicating about what's going on. And then that day, we were supposed to be hosting that RDBA summit. And I was supposed to be giving a keynote and on a panel and all these different things. And I went for maybe 10-15 minutes just to show, hey, I'm not running from this, we're here. I wouldn't go to an event that we're hosting and show up in person if we had done something wrong. And it was all just about showing face and showing that we're like here and we mean business. And then the rest of the day was just like firefighting with the team, with our investors, and then getting prepared for the night's like rounds of interviews with the Cointelegraph and Coinage and CopyZilla and I can't remember who else. It was one of the longest days. I think I was up from that day. I was basically up from when I got woken up at the hotel 5 until I think I like went to the airport the next morning. I was supposed to leave like a day later, but I left earlier that morning. Went back to Hong Kong for 3-4 hours, and then got on a plane to Dubai. Came immediately here.
Got it. There have been multiple reports, right? Like leading up to the dump for 48 hours in advance, there were a lot of like transactions and a lot of wallets were moving huge amounts of home tokens to the centralized exchanges, right?
Yeah.
Like in these 48 hours, were there no alarm bells ringing? Were you not concerned about this? Were you in touch with exchanges? Were you aware of these movements of these tokens?
So actually, like I get notifications all the time when you have these like on-chain flags or like Twitter accounts that say like big token amount get moved to exchange, and that had been happening the entire year. Actually, even in the last year, you just always see it. I see everything, not everything, but I see a lot of these things when they come up on Twitter, and people send them to me. What's this? Who's that? And I actually had gotten asked by one of the exchanges like, "What's this wallet?" like prior, and I truthfully told him I have no idea. Like, it was funded by a Bybit account. I don't. You would know more than I would, because it's your customer. But if you'd actually just seen like the whole year, you'd actually seen a lot of tokens go on exchanges, and it actually supports the idea that like clearly these people weren't dumping. Because if you have all these tokens move on exchanges, and the price action was one of the best performing price tokens of that first quarter, it just, those two don't like reconcile.
The problem here is that, especially after the CoffeeZilla interview, like majority of the community has been blaming you or with the tactics. So you mentioned that you did $25 to $30 million worth of OTCD, and then you've been injecting that money back into the charts, and people see that as price manipulation, or like frame that as one of the primary reasons why the token dumped in the first place.
Yeah,
where do you stand on that?
I think that's a total red herring, to be honest. First off, what I said with coffee was like, we've done treasury sales, which again, these tokens are still locked. So everyone does treasury foundation rounds or whatever. We do not do necessarily one specific round where we'd say, oh, hey, we're going to go out and raise 100 million. We'd be like, okay, this investor wants to do 20. This investor wants to do 5. This investor wants to do 2.5. And it's as needed and when needed basis, or just like when there's interest. Or if we're aligned and feel that there's an interesting deal here to bolster the treasury. And when there was excess capital, over the course of a year, we would do occasional token repurchases. And I think that was I think I said on coffee that it was 10. I think it was like 12, 13. This is over the course of a year. This is not, to be honest, like even buying $12 million of tokens when the token's at 6 billion circulating, honestly speaking, it's not going to do much. And if you just look at the actual volume of what was repurchased and what is still held versus what the actual volume and transactions were happening over the course of that time frame, it's like it's a drop in the ocean type of scenario. And it was painted as this, oh, you're doing something wrong. I think what he was trying to do, and he actually came out and updated his video, I'm not sure if you saw, that he was trying to get me to say that I like was working with this Mr. P guy or something, who I actually found out like apparently who this dude is. I've never met him before in my life. Some Israeli guy named Itai or something, and he's scammed a bunch of projects. Never had anything to do with him. I've never talked to him. Zach XBT asked me about it, and I told him as well. Literally, I have no clue who this dude is. Yeah. But he seems to have played some like part in setting off alarm bells in the industry that like something was going on. I don't know exactly what or how or what he actually ended up doing there, but that was definitely a red herring in this situation. Okay. And again, I think I told Coffee the same thing. We did do token repurchases. We have not sold a single token. The whole point was we wanted to use them for later purposes. In many cases, but that was, maybe if I could go back and say, hey, would that like smooth things over and make it seem like there's a better perception in the market? Would I not do that again? But I fundamentally don't think we did anything wrong. Just like in the TradFi markets, like people do stock repurchases all the time. And again, we didn't sell anything. We still haven't sold anything. Yeah, I think that was just a little bit of an attempt at a gotcha that I don't personally think he got me that way. And again, I appreciate all these interviews, and everyone needs to find the truth and whatnot. But again, blockchains are there for a reason, and that's why we put out a transparency report the week before the incident of all the wallet holdings. It just doesn't make sense why we would do that right before we're going to go do something shitty like that.
And even like when I want to break it down in a step-by-step manner as to what really went down. Right? Yeah. As I mentioned, like leading up to this, there were huge amounts of like token transfers to exchanges. There was even a wallet related to Laser Digital, which was
not
like
Laser. It was not Laser Digital.
It wasn't.
Well, so the initial wallet that it came from was, and they said that publicly that the initial wallet that they linked was, but where it went to was not. It was the closing of some sort of financing trade or whatever. So it was just, they're an asset manager. Okay. They work with third-party investors and firms and whatnot who do collateral trades and all kinds of stuff all the time. So the initial wallet was, but after that first transaction, I think it was like 6.5 million tokens. After that first transaction, it was not Laser anymore. Okay. And they came out very clearly and stated that. But again, both of the investors, Laser and Sharuk, who got implicated in this, both came out and published their wallets and said, listen, we haven't done anything. We haven't sold anything. We're still backing the project, and I can confirm they're still absolutely supporting actively as much as possible.
Awesome. And then people were basically like putting their own tokens as collateral and then borrowing against those assets. And because the OHM token had very little liquidity, right, you could basically move the price down very easily by selling all these positions, and then that caused a liquidation cascade. Yeah. Looking back right now, what do you think you would have done differently, or what are some things that you figured out that might have caused all of this?
So I think the token was not illiquid. It had less liquidity on the spot market than it did on purpose, just because there wasn't that much supply. Literally like I found out in the wake of this that there's people I've never even heard of that had 50, 60, $100 million positions of own. Never even spoken to them in my life. Didn't even know they existed. And they've come out and obviously they've been supportive in this time, for at least for us, which is good to see. Again, they understand what actually happened. But these were like spot positions in certain cases. And there just wasn't a whole lot of spot liquidity, which is why the price actually could be driven from that. But on the perps markets, it was super liquid. And it traded pretty 400 or 500 million every day on perps. But what we ended up seeing happen, and what we've seen happen since, is that there was definitely activity that suggests some sort of, I don't want to use the term attack, but like a coordinated move that we don't know who did it, or we don't know who was involved in it, whether it's a group, whether, honestly, we don't know. The people who will know that are the ones who have the ability to see KYC exchange account records, and that's not us. And they were using, in many cases, some of these people were using OHM as leverage on margin positions. And when the value of that collateral eroded, it made it easier to liquidate. And again, the timing is weird. Like, why did this happen on a Sunday night? Why did this happen right before? We had so many different things planned for that week. We had at RWA Summit, we had a big mainnet integration happening. We had all these different things. So it's just a little bit, a little bit suspect.
So I'm no expert here, but I love talking to like people smarter than me, right? And a lot of founders, a lot of these DeFi people that I talk to, how they've been like explaining this stuff to me is that what usually happens is that when a project does OTC, right? And then when you do it at a discounted rate, so all these parties who are buying these OTC deals, they are like long on spot, right? Because even though if it's locked, but they're still long on spot.
Yeah.
And just to have a delta neutral hedge, they like short it on the futures market.
Yep.
So do you think, and this coordinated move or coordinated attack of people who knew about the situation could have moved the price by selling huge amount of tokens? Do you think that might be a scenario here?
No. I don't think it had anything to do with the OTC.
Okay.
To be honest.
Okay.
I think these are totally separate incidents.
Okay.
The way that you explained it is accurate. Projects, when they do OTC or they do transactions with locked discounted deals, many cases, these, particularly if you work with like trading firms, a lot of them will take a delta neutral position, so they'll hedge. We've always tried to say, again, we can't guarantee anything just because what happens on exchange happens on exchange, but we've always skewed towards long only, and we ask very directly, are you going to hedge this? And if they do, again, like they'd say, oh yeah, we're going to hedge 50% of our position. But 50% of a $5 million position is very different than a cascade, the magnitude that occurred a few weeks back. So what we then were able to see through third-party analysis that was just done by the market, TraderView 2 is this guy named Dom, LTRD had a really good one. They were able to take tick data from the exchanges and see really where a lot of this incident started occurring from the time of the incident. But what I think is actually interesting and hasn't really been viewed, that we've seen a bit more since, is what happened in the hours leading up to it. And there's all kinds of stuff that I can't really talk too much about at this stage, but yeah, it's pretty crazy. And it does suggest that there was something else going on that hopefully we'll figure out sometime.
Got it. Also, you mentioned that over the last 8 to 10 months, the OTC deals, the cash that you've been injecting, right? It was orchestrated by your market makers in a TWAP manner, right? Like, what was the goal behind that, and like, how was it executed? At least in your mind, like on paper, what did you want to achieve there?
I guess like the whole point is to really not move the market, honestly. Right. If given the size and given the tenure that we were doing it in, or the time horizon, like we weren't just going press market sell, or sorry, excuse me, market buy, and like buying like one big candle because it's stupid. So you do say, hey, we're going to buy 5% of volume over the next week or something like that. So you do the same thing if you were selling, just for better execution, so you don't move the price, basically. That's just so you get the better price, so you can, again, get the amount of tokens that you want back, and then you can do whatever you want with those, whether that's use that for foundation delegation programs or stake it or whatever.
Got it. In the last 2 weeks, right after the incident has unfolded, how has your strategy changed so far? Even in terms of like your token performance, you did announce like a burn mechanism, right?
Yeah.
But what are some new changes going forward? How are your market makers reacting to this? I think you're working with Manifold, Laser Digital, and one more, Amber. Yeah. So what is the plan going forward for the revival of Mantra?
Yeah, I think there's a few things, right? So like, yesterday was on stage at Token, and that was meant to be the, like, hey, this is the closure of this chapter, and we want to focus on the way forward, because honestly, I've talked enough about this. Yeah. So this is going to be the official last one, I think. Honestly, I want to get back to building as much as possible, and the last 2.5 weeks have really just been like PR, crisis, comms management, and not a whole lot of sleep. And just dealing with the downfall and just making sure that all of our investors are still aligned, all of our partners are still on board, exchanges, regulators, etc. And we've come out and published like a real-time transparency dashboard that has all the different token holdings that we want the community to give us more ideas about what other types of information do they want to see. But at least for the time being, it has all the different wallets and whatnot on the various different chains that we are supported on. I think we're going to be adding, or not I think, we are going to be adding additional transparency and like real-time monitoring / like even alerts around bridging transactions so people can see how it actually works. Because one of the big pieces of FUD was like, how does the actual bridge work? We don't have a decentralized bridge because there's a significant honeypot risk in that. Yeah. And basically how it works is you have 1-for-1 ERC and mainnet token. And as one ERC comes in and gets sent to the burn address, one mainnet comes out the other side. Then we had a threshold where under 30,000 tokens, it's instant. Over 30,000, it will just have a manual release. Okay. And that was just mainly for safety. Yeah. And so we're gonna have some like real-time like alerting about that, so people can. I think it'll even have a Twitter account, so people can just make sure that hey, it's there, nothing to hide. But we do want more feedback on what other information would people actually find valuable, exchange inflows, whatever. Honestly, whatever. I want this to be like the epicenter of all tokenomic, foundation, treasury like information for the project. That's one thing. On like governance, we have currently I think 6 foundation nodes in the network out of maybe 30. We're going to be deprecating 3 of those within the next like few weeks, month or so, and adding an additional like 20 plus validators so we continue to distribute the network stake so people feel more comfortable that there's a more decentralized network that will be more resilient. We are honestly continuing business as usual as much as humanly possible, and I'm looking forward to get back to business as usual because I haven't been doing almost anything in that regard these days, or at least just not as much as I would normally. We do see this as people are writing us off right now, but for us, this is our version of Solana at $8, and we're still here, we're still going, we're financially sound, we're working on various different buyback programs as well. But people have been asking for buyback, but it's just a lot more complicated and nuanced than just going and hitting buy right now because people don't fully understand like where tokens are sitting on exchanges and how it all works. So we're working through that. I think that will be something, if we can manage, will be really helpful and strong for the market. And bringing on new institutional partners to supplement the existing ones who are still in the game.
How has this incident affected your existing partnerships? For example, the MAG group, right? Mm-hmm. All these existing deals, have they raised any concerns here?
No, we've been trying to stay in constant contact with all of our key partners as much as humanly possible. And I guess the one thing that this has really shown to us is like, we really know who our true friends are and we know who our fake friends are. So even walking around like Token yesterday, it's funny to see people who like I know personally were saying all kinds of nasty bad stuff on Twitter or in whatever their groups and whatnot, and then won't say a single thing when I'm walking down they won't even look at me. And others that are doubling down on say, hey, we understand you guys got out in front of it, you owned up to it, this was a horrible incident for everyone. Our community got hurt, Mantra got hurt, our team got hurt, our investors got hurt, but we're moving forward. And we've seen people doubling down on that, and we do really appreciate those type of partners. And it's refreshing to see. Like in my position right now, you just have to look at the silver linings, because if you don't, honestly, there's a lot of shit that's going to make you depressed and sad and whatnot. And for us, it's about we need to look forward. We need to maintain some degree of positivity, and I fully believe that we're going to be making our comeback, and for the second time. We came from 1 cent to $9 in 15 months, and now we're at like 50 cents or whatever.
Because you mentioned the 1 cent to $9 comeback, this was also a time which was overlapping with all these huge announcements, right?
Yeah.
But at the same time, this was also the time when you were like doing the buyback programs, right? What do you like? What is the percentage split do you feel helped this huge price appreciation? Also, were you doing buybacks before this as well?
Yeah.
Okay.
I think the buybacks are honestly, fundamentally, complete red herring in this situation, and like we're taken completely out of context to paint this picture that this was something that we manipulated or did wrong. I categorically deny anything to do with that.
Okay.
Honestly, there's no way that $12 million is going to move a token from 1.7 cents to $9 in 15 months. That is, excuse my language, fucking impossible. I wish. I fucking wish. Could you imagine how many projects would do that with $12 million if they could?
Right.
It just doesn't make any sense. And I think if you actually look at what we delivered at some of the substance that we were able to achieve, licensing, partnerships, launching the mainnet, bringing on users, we have several 100,000 wallets and real users who are actively engaging in our community or actively engaging on chain. Did the price move probably too quick? Honestly, yeah. Like that, it did, right? It was up to us to try to catch up to that price action, and we're working towards that. Now I think substance can front run price. And that's going to be our job. My job right now is we need to be a product-led company first rather than a token-led company first at this stage. And I'm fully focused on that right now. In the end of the day, the price action that we had was crazy. No doubt about it. But did that have to do with the team doing a minuscule amount of buybacks? Honestly, not. It just did. And if, again, I'm finding out now and almost every day, new people who had 10, 20, 30, 40, $50 million positions in this token. I've never even heard of. Literally, I've never met before in my life. Didn't even know you existed. Who the hell has $50 million of my token? That's crazy. I appreciate it. I appreciate that greatly, but it's great. It's still crazy to me. And even talking to some of the exchanges, they're like, almost everyone in the UAE had this token. And that's not just the UAE. Like, we have people all over.
Right.
In the US, I think a lot of the kind of Twitter pundits and talking heads of the day said, we've never heard of this project before. And I feel as an American a little bit sad about that. But we intentionally were not in the United States because of regs. I live in Hong Kong. I spend time in Dubai. Go ask people in Hong Kong and Dubai if they know Mantra. I guarantee you they do. So that was painted in a way, this is some bullshit scam, like I was from Dubai, whatever. And honestly, I do take some offense to that. Because there are real people who are involved in this project, and there are real people who have significant financial stakes in it. And there's a lot of people who are hurting because of the actions that went down, but they're supporting us in the comeback, basically.
Right. Usually, there's a segment in the podcast where I ask the founders about their journey and what have they learned.
Yeah.
I feel that you are a very special case here because there's no one else in the industry who has gone through this journey, right? Especially because of this one incident. What are some key learnings that you've had that you would like to pass down to founders who are about to launch their tokens or who might face these huge token appreciations?
Yeah, I think there's an opportunity for the industry to set a higher bar for transparency. And I think we are committed to leading the charge here. And actions will speak louder than words, but I want people to be comfortable with the amount of information that they're able to receive from us, from other third parties, that it's verifiable. And I think by leaning into that, honestly, it probably will make it a little bit harder because you're going to see people who do, shady stuff and these crazy deals or whatever. It comes out like every day you hear these new crazy stories, honestly. And I think that's an opportunity, frankly. I would also suggest, not because it went wrong in my situation, but more because it went right, pick your partners really wisely and your investors really wisely, because all of our major partners, Laser, Sharuk, Brevin, like all these guys are still in it with us in the trenches. Having that support and others, having the support of people when it's all up is easy.
Yeah.
But having it when you're in a time of absolute crisis, and the amount of support you've gotten from those folks, financial institutions, big partners, Google, UOB, which is a Singaporean bank, I was just with them today. Like all these guys have been incredibly supportive, and they say, hey, we believe because of the team, because of you, because you guys got out in front of it, there's still something to be saved here. There's a lot to still work for here, right? We're down 95%. It's still almost $1 billion token project. That's a shitload of value to work for and to bring back. Not just to mention my reputation, which I think is more valuable to me than anything, frankly. 100%. So having partners like that is really critical, and I'm really appreciative for those guys sticking with us, and also just the team. Tough time. We went from being like the darlings to probably the most hated. But I believe personally, I'm much better when I'm not much better. I'm at my best, I should say, when my back's against the wall, and Mantra's in wartime right now, so we're ready to fucking go.
Awesome. I'm excited for what's ahead for you. All right, because you said that you want to go back to building, right? Let's switch the gears here and talk about Mantra for a while.
Sure.
Can you break down the deal with Damac? Like, how did you land that deal, and how did you close that deal? UAE, obviously, people know that it's very forward-looking in terms of regulations when it comes to real-world assets. But Damac is a huge player here, right?
Yeah.
And players like Damac and even the Mac Group to come in this big size, experimenting with new technology, right? Walk us down through that deal.
Yeah. So I met the children probably almost a year ago, right before Token 2049, and we just I think we just announced Sharuk as our investor. I think they're involved with Sharuk as well in their own personal capacities, the family, as far as I'm aware. So it was a friendly connection, and we got to get to know them, build a relationship, and honestly it was almost a year coming before we were able to actually announce something.
Yeah.
So we worked very closely with them to figure out how we can do stuff together, what we can announce, what we can work on, and we've already started putting these assets on chain. We're fortunate that we've been able to start actually moving this forward, and we look to continue doing that going from here on onward as well.
But how did these conversations go? Can you walk me through that deal-making process?
Yeah, I guess we initially got introduced from our investor.
Yeah.
And honestly, the first conversation I had with Amira was she was grilling me. How does governance work with these tokens? How's this going to work? How's the technology different, etc. And a little bit blurry about what happened after, but I think after I walked out of it, I was like, damn, this is going nowhere. We kept at it, we kept building a relationship, we kept showing up and getting to know each other more. And over time, we were able to figure out hey, this actually makes a ton of sense. And I think, I'm fairly certain that they also were in it too. And they're just in their own personal account. And the people in the UAE, people in Dubai particularly, they really got to know it. There's a lot of people who, I don't want to say it's their personality, but it's a big part of their life here now. Over at least the last 12 months, it's been a big story. And we were able to, I guess, just get them to believe that what we had built, the way that we had built it, and the way that we deal with both the good and the bad, which clearly now they're seeing how we deal with it in the bad times, is a way that builds trust and credibility technology and the platform. And I do say this a lot, RWAs are not a technology game, it's a relationship and it's a trust game.
Yeah.
That doesn't mean you can't have shitty technology, but it's not the needle mover. You need to have that relationship and the trust. And again, having credible supporters like Sharuk, like Laser, other financial institutions, that goes a long way. And then of course just that personal relationship that frankly you can't just fork. You have to build that up over time. And they were also some of the first calls that we had when things were going down. Hey, this is a tough time, but we're here and we're committed and we're still going to be we're not running, we're not going anywhere. We're going to do everything we can, every waking moment to fix it, basically.
You mentioned you want to start being a product-centric company instead of token-centric company. So now, if today you want to pitch Mantra to a user who has no exposure to OHM, no exposure to Mantra, who has no idea, right? What is your pitch today? What can I do as a user on Mantra? And what all stuff can I do related to real-world assets on your chain?
It's a good question. The last 2.5 weeks for me, I haven't been thinking about that part of the business, to be honest. I've just been in the war mode. And I think one of the things that we've done is separate out the team to do business as usual and a smaller group of us fixing the immediate fires in front of us, right?
Right.
And in that separation, if you want to call it like that, or in that the dust starting to settle slowly, we even shipped our EVM testnet because we're a Cosmos Mortem chain. So we shipped the EVM testnet. We're actually just doubling down on the infrastructure for the chain itself. One of the biggest challenges that we saw for us as a layer one was not that people couldn't integrate and build using Cosmos, but that everything took more time because they didn't have the devs and it was more costly. So if you want to integrate with a tokenization platform, instead of it being a week or 2 weeks, it was 9 months. So having that EVM compatibility layer and multi-threaded execution is quite important for us. And that's one of the kind of key technical focuses for this year is really push the performative nature of the blockchain, add production and enterprise grade EVM solutions, tooling, etc. for these institutions and partners that we're working with. We've actually even had, I won't name the name, but one of the largest stablecoin issuers deploy on the EVM testnet already. Actually, as the first partner to deploy there. That's super bullish from my perspective that people are still, again, You know who your friends are.
Right.
And we want to focus on the assets that we have a strong positioning in within the real estate sector. We've done a lot of work on the fund sector as well, but we haven't announced that much around it. And we continue to build up this DApp ecosystem of making actual real assets usable. The biggest challenge with RWAs is you can have RWA tokens like Ohm, which frankly have nothing to do with RWA other than being like the token for supporting the issuance of RWAs on a protocol. But the actual RWA assets themselves, like there's not a whole lot you can do with them yet anywhere because of licensing, because of regulatory issues. And we want to leverage and double down on that licensing that we have through Vara, and continue to push and launch kind of this RWA exchange platform and lending and borrowing products and these type of things to make those assets more composable. And we had an RWA accelerator that we announced with Google Cloud earlier this year. We're thinking about canceling it because they're supposed to come out to Dubai this week.
Okay.
And we decided that's not the right message and that's not what we stand for. So we had, I think, 8 or 9 projects come out to Dubai, still building on Mantra, still have conviction in Mantra. And that's been really good to see that there's still people building, still active stuff going on. I think RWAs are they're still very early. Still a lot of work to be done. There's still regulatory issues that need to be solved. There's still liquidity issues that need to be solved, utility issues around these RWA assets. And I think if you take all the noise aside, fundamentally Mantra hasn't changed, right? Now we're going to have to be more known for something else. Like now I don't want the attention to be on the token. I want the attention to be on all the other stuff that we had been building. Right. But now we're going to be under the microscope, so I want it to be even better and stronger. And I think that's an opportunity.
Right.
Again, right now, people are going to have their opinion about whether we're legit or a scam or whatever. I think we've done what we can. Obviously, we want to always do better. I'm sure there's always things we could have done better, but hindsight's always 20/20. Well, right now we are like literally and figuratively trying to turn that leaf into our next chapter. And I think we're going to be well positioned for that. We have our strong backing and partners. We have financial capabilities. We're financially strong, and we're going to continue pushing.
Awesome. I'm excited for what you do next from here. I am not a judge of what happened, what was right, what was wrong, but I at least hope that using this interview, people would be more aware of what really went down. And thanks for doing this. Thanks for
I appreciate it. No, I appreciate you having me on, and I always appreciate the ability to talk directly to the community on these type of topics in a little bit more of a personal fashion.
Yeah, awesome.